Hello guys, good morning in Europe, good evening in United States. This is Ahura again with another daily outlook video. As you know, in this series of video, we are watching at the market, looking at what happened yesterday in the market, what is going on, and what is our expectations for today. Sorry, I'm traveling, so I don't have my webcam with myself. Therefore, I'm just putting my photo there. You can see my nice photo, and let's go to see what is happening in the market. Yesterday, this is VIX chart. You see that VIX still is so high, and the market risk is increasing. Yesterday, we had one of very important data, which is labor market data ahead of today's NFP. Day before that, we had ADP numbers, and yesterday we had initial jobless claim. ADP numbers, as you know, increased by 535K, and yesterday we had amazing, interesting data from initial jobless claims. It shows that initial jobless claim increased to 222K, more a little bit more than the expectations was like kind of less than 240K of expectation, which is better. I mean, sometimes it's not bigger number is not good. Sometimes the lower number is good. However, the main important data here was the layoff numbers. The challenger company just at the challenger companies layoff numbers were fell by 14 fell to 14,875, which is the lowest record since May 1993. So we have the layoff at its lowest level since 1993, almost 27 or 28 years, which means that the companies they prefer to have and keep their employees whatever happen at any price, because even if it's going to be more expensive for them, however, it's going to be better to find new jobs, new employees. These why they are increasing the look at the chart, why they are increasing this market risk. As you know, kind of or currently we have a labor shortage in the labor market. So the labor market is trying to keep its employees with better, well, and now the data is showing us that the labor market is increasing, rapidly increasing, very good. So which it means that we are waiting to see more hawkish policies. More hawkish policies currently with this virus situation will increase the risk. Just add that the U.S. 10 years note bond yields also was still trading about 1.43, which is a very low level comparing with 1.6, 1.68%, 1.67, and 8% that we had in the last 2 weeks. And now falling that level in the ground still shows that in line with the VIX, in line with the market risk, we are having that also showing that the market risk is increasing with the lower bond yields. Lower bond yields at the moment because of the increasing the market risk, increasing also the demand of US dollar. Yesterday, as I mentioned, and I wrote that in article. Hope you wrote that article. You read that article. I mentioned that if we have the better than expected U.S. employment numbers, it's gonna be supportive for U.S. dollar, and U.S. dollar got supported right after the numbers. Look at here. This is right after the numbers, employment numbers. U.S. dollar started to increase and now trading above 96 mark. That's what we were waiting to see. This increasing of US dollar because of better than expected economic data put the gold under pressure. You know, that increase in US dollar was not because of its safe haven, it was because of better than expected US economic, I mean, kind of, it was US economic data because it was telling us that the economy is improving very good, and that's therefore, while the economy is improving very good, we don't need the safe haven, gold safe haven. That was the reason to see the gold to fall all the way down to 1,762. Now it is kind of recovering itself, but in a bigger chart. If you remember, we talked about 1,770 mark and told that under this level we can see the market falling. And if the market wants to recover itself, we have to see the candles above 1,800. So same thing in silver. However, the silver found very strong support at 22.3. It was in my article also last night that I published in the website. You can go to the website down under the video. You can find the address. There is an important, very interesting articles. You can read them. I wrote there why the reasons that we can see the silver here. In the oil market, the OPEC meeting will be finished today, and we are waiting for that. And as I mentioned yesterday, while the OPEC meeting is ongoing, we have the OPEC meeting. We can see the oil around same levels. We don't have enough evidence to see the oil higher or lower, so we're gonna wait for OPEC Plus announcement. For S&P 500, Nasdaq, and Dow Jones, yesterday this economic data kind of was emotionally supportive for the kind of for stock market, but as I told, better than economic data means more hawkish policies. Yesterday, Miss Yellen, Janet Yellen had a speech. Also, who is that? The second guy that's speaking from Fed. Oh yeah, yeah, Fed President, Atlanta Fed President Bostic, also was talking yesterday. He mentioned about both of them. Both of them they mentioned about that faster. I mean, increasing the speed of the tapering with the higher numbers. About the inflation, Ms. Yellen told that better than expected economy increased the inflation, so it is the time to stop saying transparency, this transitory, sorry, it's to stop saying transitory, and it will is temporary. The higher inflation, transitory, it's gonna calm down. Now, she mentioned yesterday that it will take time to calm down because better than expected economy increasing the inflation. So higher inflation, it means that Federal Reserve should start also increasing the rates. That is not what the stock market wants to hear. So, still, the bigger picture is downtrend for Dow Jones, for Nasdaq, and for SP 500, all of them. So these charts, they are telling us that still in a bigger number, uh, in a bigger number, they are still in a clear downtrend. So there is nothing to be for now positive about the stock market increasing. About the Bitcoin, SEC rejected the second Bitcoin spot ETF proposal. The spot proposals, spot ETFs is not something that we can see at least now, because yeah, we can see the futures, but spot is a little bit hard to understand it. Where we should have the spot for the Bitcoin, it's a little bit risky because if I want to have a spot Bitcoin, I will buy the Bitcoin. I don't need that to have the ETF with the spot Bitcoin. At the same time, for me as a user, at the same time, the risk is so high because the Bitcoin. Just look at the chart. Please look at the Bitcoin chart. We can see this sharp increasing and falling. This sharp increasing, falling. It's not something that ETFs can have it. Can handle it. That's not what we can see in the ETF stock. So that therefore, for now, the ETFs being with the spot, the ETFs being with the spot, still spot Bitcoin is a little bit far that expectations. So there is nothing else in the cryptocurrencies market. I mean, in that's like that's we had also the news from India, Indian regulatory, that they are not banning the crypto for now, and Goldman Sachs and other U.S. banking, insurance also considering the Bitcoin. I mean, they're trying to have the considering to have the Bitcoin backed loans. Say they want to give the Bitcoin with they want to give a loan based on the your Bitcoin. Senator Warren also target the Bitcoin miners creating. This says that Senator Warren says that the Bitcoin is not environment friendly, kind of environmental friendly, and we have to have a more law about that, more regulations about that. So still the regulation, but regulations in the regulation in India it was positive, but however, still there are this different about the regulation about in United States and some other countries that they are talking about to have to bring it into to the more regulars with the stable, especially with the stable coins. So these data, these numbers, and these news still are negative for the cryptocurrency market. So that's we can see that's the reason we can see still they're under pressure, and all of them, all the main coins still under pressure. For now, we don't have a positive still. We don't have the positive outlook for cryptocurrency market on the Euro USD chart. Stronger USD putting the euro under pressure. That is what is happening right now here, and it is what we were waiting for the last few months, actually, kind of. Still, overall downtrend outlook for Euro USD is still there, same for GBP USD. Yen, on the other hand, is trying to find some support because of safe haven demand, and also US bond yields. You see that it's in a very low level. So as long as the US bond yields are in a low level, they don't have demand. I mean, sorry, they have less uh, mm, kind of less yields, so less benefits for the clients, for buyers. The Japanese buyer are not interested there, so the yen still staying stronger. This is what usually happens between the yen and Japanese yen and US bond yields. Okay, this is generally an overall what is going on in the market. Hope it was useful for you guys. See you guys again on Monday, right? Take care about your trades. Oh, sorry. Before leaving the market, yesterday, but let's say about the. So I totally forgot about the economic calendar. It's not just about the U.S. data. Yesterday we had the data from other countries as well, but however, the data from U.S. was Intel jobless claim from the United States and speeches from FOMC member. They were under. Kind of in the spotlight. For today, it's PMI day. For today, Purchasing Manager Index. So far, we had the Chinese PMI data from for the service sector. Chinese service sector in the private sector, PMI was less than expectations at 52.1. If you remember, 2 days ago we had Chinese PMI Purchasing Manager Index for manufacturing, and for the first time in the last months, it fell under 50, all the way down to 49 point something. And now we can see the Saxon service PMI for November also at 52.1, lower than 52.6 expectations and 53.8 of previous month. Later today, we will have the inflation numbers from Turkey. We will have Miss Lagarde's speeches. Miss Lagarde's speech in like in few hours. Ms. Lagarde should give us more data, more information from ECB outlook on the current situation and what we have probably to expect from next week's ECB meeting. Same for the PMI numbers for the service sector. We will have from Germany, we will have from Eurozone, and we will have from United Kingdom before having retail sales data from Euro. Also, later in Europe, in the US, in a North American season, in a US season, or kind of, all focuses will be on employment data like average earning, non-payroll numbers, U6 employment, and private non-farm payrolls. All these numbers, employment level, unemployment level, all the numbers from United Kingdom and from the United States and Canada. Canada also will have the labor market data today, which should be watched. And market will not ending unless we have the durable goods services, durable good orders with from United States. We will have the ISM non-manufacturing employment, ISM numbers totally, factory orders, ISM numbers, ISM non-manufacturing PMI. This today is very busy, very busy day with all this data that I mentioned. So take care about your trades. So this very all. So let's see what's their effect. Let's give it before leaving. I'm sorry to just like mention that 2 times mentioned goodbye and like still I'm talking. Look at here. The data today from the employment numbers, SKS5, SP500 is much better to talk about. Okay, here, look at the chart. We will have the NFP numbers today in the focus, and also not just about the NFP numbers. We have the ISM manufacturing, we have durable goods order. We have too many data today. But we have a service purchasing manager index data. All this data, most of them, mostly in general idea, we are waiting for better than expected data. So we are waiting for the positive numbers. These positive numbers will help the positive, will help the still the yesterday's comments from the FOMC members that we have to go to more tightening policies. They have to put the pressure on the U.S. chart, on the U.S. stock markets. Therefore, here we go. Stock markets downtrend can continue its way. U.S. dollar can continue its way up. Gold will be under pressure. Oil will take off from here to still increasing a little bit more, not so much. This is general what's happening in the market, what happened, and what is our expectations from today. Hope it was useful for you guys. See you guys tomorrow, not tomorrow. See you guys Monday again, and have a good trades. Goodbye, and see you guys.